wake up, because the FASB, the AICPA, and the SEC sure did. This is the Issues Watch podcast. Hello, and welcome to the Issues Watch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel & Company. These A&A episodes qualify for nano credit. If you're interested in earning CPE credit for this episodes or others, hit the pause button now and head over to the njcpa.org/nano to find out how. A quick disclaimer. The views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel Co. Okay, so as I said, the FASB decided finally to issue an ASU, an Accounting Standards Update, 2022-01. Get ready for this one. Derivatives and hedging, fair value hedging on portfolio layer method. So, I will give very little bit on it, but the one thing I'll say is if you have derivatives, you have hedging activity, you need to look into this. And one thing I'm going to recommend to the society, if we can get somebody to give a full package update on derivatives for 4 to 8 hours, but it's probably something that we all need at this point. So anyway, what this talks about is just a couple areas. Nothing that I've been seeing, but those that have hedging activities, I know that we have some people that are in exotic type of instruments. You need to start looking into this. Multi-hedged layers of a single closed portfolio. Accounting for hedge basis adjustments under portfolio layer method. Okay, so this pronouncement just came out recently. And so I'm still reading through what all of this means, to be honest with you. And again, if you have these in your company or your clients, please start looking into this. Not immediately, though. You do have some time. Fortunately, it's not like some pronouncements that are effective and tied to a previous pronouncement. For public business entities, that's the way it's described now. They're PBEs, public business entities. It's for years beginning after December 15, 2022, which means January 1 for calendar years, January 1 of next year. So start looking into this now. Okay, for non-public business entities, it's for years beginning after December 15, 2023, so you have just a little bit of time. Got to remember there is a pronouncement that is coming out that is going to be hitting us all pretty hard. It's the CECL, the current expected credit losses. It's a significant pronouncement. If you haven't been looking into it, then you should just start familiarizing yourself with it. It sounded really loose, like, okay, does this really affect me or my company, because it's about credit losses and loans. And if you look into it, it goes down very simple that if you have accounts receivable, you have to consider it, because now you have to start thinking about how you should be creating your reserve for your losses. Now, we always put in the footnotes saying, or a company's put in the footnotes saying that the expected loss is based on historical results, and you can't just base it on historical results anymore. You really have to bucketize things and consider how you're going to be collecting those receivables over time. So how does the 90, 60, 30 current look? Because you know some of the current is going to age out to a 90. You have to bucketize everything. That's a real quick synopsis of CECL. It's a big one. Look into that. Okay, EITF, Emerging Issues Task Force, accounting for investment of tax credits structured using the proportional amortization method. What they're talking about here are the board decided to add a project of an Emerging Issue Task Force agenda to consider whether proportional amortization, that's the amortization of the investment costs, should be expanded to investments and tax credits beyond low-income housing tax credit investments. Okay, so if you are in this area, please look into this. I know we deal with our HUDs and low-income housing group. It has to look into this to see if it affects them or doesn't affect them anymore. So if you have these, I know I was talking with one of our members, practitioners, I won't say his name, but he was talking about HUD the other day. He should be looking into something like this. And of course, pronouncements that are out there. What else? What would a presentation be without me or Frank talking about leases? Okay. Only thing I'll say is the Journal of Accountancy. If you don't get a copy of the Journal of Accountancy, get it. There's great information, much like society information. They've got good online resources to read up on articles. And it had an article for leases accounting urgency ramps up for nonprofit organizations. Okay. So they addressed in there some big changes for early adopters. I don't know if you remember, if you were part of a nonprofit group and you went to the nonprofit symposium years ago when it was live. Frank Boudelet and I did a presentation to the nonprofit group on leases, and there's some particular accounting around that in nonprofit organizations. So I recommend you look into that and this article. It talks about the discount rate. Remember, the FASB came out with the discount rate for non-public entities, that you can use the risk-free rate. And remember to keep the lenders informed. That's for all our sponsors. Talk to the accountants about what's coming out on the lease pronouncements. All right, the AICPA came out with a couple things. The big one, an exposure draft. It's just an exposure draft, so don't get crazy, but it's an exposure draft on audits of group financial statements. What's a group financial statement? Just look at it this way for simplicity. If it's for starters, if you have a consolidated and you have subsidiaries that are outside where you're performing your audit, or even if it's a single entity and you have audit components that are outside where you're performing it and you're using other auditors. They are the component auditors, you are the group auditor. So they're trying to come out with a pronouncement that kind of cleans things up to strengthen the auditor's approach. And interestingly, they're trying to converge more with international standards on auditing, 600. And I've seen this through a lot of presentations, and I know a lot of people that don't deal with public companies saying, why is he talking about the PCAOB, the SEC, and now the international? Because that's what's happening at the FASB, at the AICPA. They're trying to converge all pronouncements so that there's continuity and there's similarities. Convergence is a big word. And they even said in this, they talked about the PCAOB's project on supervision of audits involving other auditors. So you see how they're trying to make similarities, and there's not so much disparity between, and those that do handle different type of engagements don't have to handle things so many different ways. This would be effective for periods ending after December 15, 2026, and I know some people are saying, I'm going to be retired at that point. Okay, so the PEAK, the Professional Ethics Committee, issued a wide range of ethics guidance. Very interesting stuff that came out, and I look forward to looking into this more. Non-compliance with laws and regulations, what they refer to as no-clar. It sounds like something that Mork would say on Mork and Mindy, nanu, no-clar. Okay, no-clar, non-compliance of laws and regulations of what you should do if you find somebody is doing something wrong. Okay, and this section is relating to those in public and private. So you should be looking into it. Frank and I do a lot of presentations now on the New Jersey law and ethics, and it's really interesting. I'm seeing how this is going to fold into that. It should be this and other parts. The effects of independence on various bank loans, including student loans. So they're including the student loans into the language of loans that members are allowed to take as it relates to a test client. Acquisition that creates a new affiliate and the effect on independence. This is a big one, unpaid fees. You know, we always said if the test services were unpaid from the prior year that you have an independence issue. Now they're trying to take a principles-based approach. Finally, a self-review and management participation, and what they're really focusing on is helping clients adopt new accounting standards. And we see this a lot. I see it a lot where the clients come to you and they need assistance with this, but you have to consider what your self-review and your management participation is. So it's big. There's some good stuff out there. I recommend if you can get your hands on the information. If not, reach out to me. I'll send you some information that I have on it. I do sit in the PEAK meeting sometimes to listen in, and it's really good to hear what's coming up and what could potentially affect us. And I don't mean us in public practice. I mean also those in industry. Because remember, the ethics section of the AICPA covers both those in public and private, okay, and other also. So make sure you look into that. Okay, the last area I wanted to bring up is cannabis accounting. Back on March 15th, a while ago, the state was poised to start taking applications to operate dispensaries. And I just heard on the news that the Senate President is very upset because we can't get moving with this. I'm not asking for your political stance on this in any way. I'm just trying to give you some information about this. It is legal in the state. They haven't done anything necessarily with it to make it available, but they're trying to. And the important thing for us is, are you ready to provide accounting guidance? Now, the New Jersey Society has a resource group. If you're interested in providing support if you're interested in a company, you're interested in accounting, or you want to provide support for your clients in this industry, I recommend that you look into this group. We'll give you a reference later on. They're a great resource group of people to talk to. Find out about the New Jersey Society's position on a law that the regulation that they're trying to get passed as it relates to business deductions. So, get yourself ready for this if you anticipate helping clients or companies with this. Okay. In closing, I'd like to remind you about some upcoming NJCPA events. There's a half-day FASB update on April 25th. On April 26th, Bergen chapter will be holding an in-person A&A update on revenue recognition. And not to be outdone, on April 29th, Southwest chapter will be holding an in-person A&A update on leases. Register for these events and more at the njcpa.org/events. Lastly, as usual, I ask you to join the NJCPA Accounting and Auditing Standards Interest Group and/or the Cannabis Interest Group. To do so, go to njcpa.org/groups. And thank you for joining us.